$70,000. Do you know you can contribute that amount into your solo 401k if you qualify? Let's dig it in. Hi, welcome back to Tax-Exempt Millionaire Club. We share all the tax tips and my personal experience in this channel to really help you to reach that tax-exempt multimillionaire status. Yesterday, we talked about Solo 401k. That is one of my favorite tools. Today is the part 2. We will talk about how much you can contribute, what you can do inside of your Solo 401k. Tomorrow will be part 3. We'll really drill down for self-directed Roth 401k. Why that is my personal favorite. I want to share with you some of the information I pulled out from the website, including AI, and then we'll go take a look at a few websites. Okay, let's get started. Let me share the screen. I use Perplexity.ai a lot. So I simply ask for Solo 401k, how much I can contribute, how to calculate what to invest, and which company I can go for consultation. Basically, it's up to $70,000 if you're under 50 years old. The catch-up, if you're over 50, is another $7,500. So if you are over age 50, $77,500 is your contribution upper limit. You can fund up to that number. There's the employee contribution. The employee contribution is $23,500. Up to 100% of the compensation of the business owner. Remember, we're talking about the Solo 401k. And the catch-up limit is $75,000. The catch-up limit, if you fall into age 50 to 59 or 56 plus, there's additional catch-up, which is $7,500. But guess what? In this age range, 60 to 63, there's extra $11,250. So in that case, for the employee contribution part, if you age, say, 61, you can fund total $34,750. There's employer contribution, up to 25% of your compensation. Remember, the one we just mentioned is the upper limit. But for each individual situation, it might be different. One is the employee side, one is the employer side. This is no catch-up, $25,300. Employer side, 25% of eligible compensation. Your self-employment comp after deduction, if you are self-employed, when you add both together, if it's exceed the upper limit, $70,000 under age 50, then $70,000 is your upper limit. So this is how you calculate it. I personally like self-directed Roth Solo 401k. A regular Solo 401k can invest in all kinds of alternative investment or even just in the market, such as stocks, mutual fund, ETF. This is the self-directed I was talking about. If you self-directed your Solo 401k, you can actually invest in real estate, REIT, and then here are some of the brokerage accounts for Solo 401ks. We will take a look about few alternative self-directed Solo 401ks. Let's talk about few companies here. My Solo 401k Financial, what's really cool about them is they have a daily office hour, and then they have a lot of video on YouTube. You could self-study. Another cool thing is they have this AI tool. You can register and start chatting and just learn everything about the Solo 401k. Another reputable, well-known option is directed by Matt and Mark Kohler, and I personally use them. They have some detailed information about Solo 401k. Remember, all of those will have an administrative cost and annual cost. I highly suggest you read all the information and make informative decision. That's all I prepared for you today. Next week, we will really drill down about self-directed Roth 401k. We'll see an example. If you contribute that $70,000 per year for 10 years, what you could do for your Solo 401k, how much balance you will have in your Solo401k account. Remember, if it's a Roth account, all the gains or cash flow will be tax-free and it will have to roll back into your self-directed Solo 401k. That's all I prepared for you today for this episode. I hope now you understand much more about Solo 401k. Next week, we'll talk about my favorite account, self-directed Roth Solo 401k. We'll drill down and figure out why that's my favorite. Stay tuned. Before I end this episode, a quick disclaimer: I'm not a financial advisor, not a licensed CPA or licensed attorney. Please use this content for education and entertainment purpose only. As we always say, don't let the bank's taxes, outdated financial advice limit your wealth. Consider joining TMC today, Tax-Exempt Millionaire Club, the school community. You can scan the QR code to join as well. Own your bank, own your wealth, your future, all tax-exempt. I'll see you at the next episode. Bye-bye.